Okay, let's start. Welcome back. Thanks for watching the first video. I was very much happy to see the huge response from the people and a lot of comments from the people. So I'm very excited to present the next video. There was a comment on this saying that why to invest in the properties, why not stocks and shares. See, I'm not against any other investments. Even though I'm discussing the figures or the numbers, or I am fan of investing in property, doesn't mean I don't like the other investments. So obviously if you are interested, if you love investing in somewhere else, is up to you. Do your own research and invest into the stocks or shares or digital currencies, imaginary money, whatever you call it. A lot of people ask me in the comments saying that property investment, when you invest in the property, if you generate this much of income, you pay a lot of tax. I will make another video on the property tax. But what I would like to say at the moment is we are not discussing here how to save the tax. Obviously, I will make the another video on how to save the tax or how to pay less tax in terms of properties. Paying a tax is not a sin. Paying too much tax or unnecessary tax is a sin, I personally think. So you have to be just clever enough to save a little bit of tax by investing properly. But what we are discussing here to make more money, we are not discussing how to save the tax. What we wanted to see is like make more money rather than saving a tax. Okay, so instead of making 100,000, make 1 million and then pay tax is fine as long as you're making good money. Why to not pay the tax? So if you are new to the channel, please subscribe to the channel, like, share and subscribe. And if you haven't watched the first video, please go back and watch the first video. A lot of people commented me, can you please tell us why to invest in the property? First advantage I think is sort of value. So it's like investing in the gold or land or any other properties. It's like a physical asset. So it's very secure investment because it's a physical asset, and then naturally it's going to appreciate the value in long term. So any property investment, whether it's a commercial property, whether it's land or whether it's a house, all these property will appreciate in long term. I'm not talking about some of the areas where you might get the depreciation or the value might goes down in flat investments or the investment remote areas because of certain things. But in long term, I personally think the value will go up. Values always go up because the land or the properties are limited as compared to the populations. So the population, as the population increases, the land or the development is compared to the less, and because it's the basic need, shelter like food, clothes and shelter is the basic need. So obviously whatever happens around the world, you still need the house or the flat or land to live somewhere, or even if it is agricultural land, it will appreciate the value because people still need a food or agricultural land to do as a basic need. So it stores the value in long term. That is the first important thing, and because it's a physical asset, I think it's very secure. Like it's very difficult to get stolen or damaged or a theft or burglary to happen. So and then plus it's because it's secure, a lot of companies or insurance companies will insure it as well, so easily insurable. If you compare with the other investments, banks will give you the money to invest into the properties, but bank won't give you the money to invest into shares or stocks or any imaginary money or all other investments. They won't give you the money. So imagine banks will lend you the money to invest into the properties, but they won't lend you the money to do other things. So from that point of view, I'm sure you can understand how secure investment this is, because they will lend you money to invest in. They are ready to invest their own money with us into the properties. So even if you are keeping the money in the banks, I think most of the banks, they do invest in big projects or the finance projects or maybe the development projects around the world. So that they get more returns from our own money, which we are keeping into the bank. So why can't we invest into the property directly rather than giving the money to bank and then bank invest into the properties? Okay, so that is another point I wanted to make it. The next thing is like a natural appreciation and forced appreciation. So natural appreciation, which value goes up with the inflation, so it will appreciate the value in long term because of the population and growth and inflation, value goes up. That is called as natural appreciation. But in terms of forced appreciation, as I said before, what you do is like you can add the bedroom, you can do a bit of plan change in the house or the flat, or develop a land if you have a land. So you can increase the value in long term or in the forced appreciation by changing the or renovating the property. So these are the few things you can make it into the in the properties. It's called as forced appreciation. A lot of developers or the investors or the businesses, those who invest into the properties or develop the properties, they get tax benefits as well. So you get tax benefits like value depreciation, you can from the tax, loan and mortgage interest rates, you can deduct from the tax, and the cost of repair, cost of maintenance, cost of utilities, which are against the properties, you can deduct from your profit and then pay the tax. So these are the tax benefits as well. A lot of people are thinking passive income is the big. I know it's a big thing. Passive income. A lot of people wanted to invest in the property because it's a passive income. It is passive income, but not fully, because if you treat this as a business, you still need a couple of hours, possibly 2 or 3 hours, or maybe 2 hours per week, which is not a big time, like 9 to 5. It's not a full-time job, but you still need a bit of time to look after your properties or the business. So don't consider this is like fully passive income. It is passive income, but not fully. You still need a little bit of attention to look after properties, to look after as a business, okay? But it is a passive income. You can retire from your 9 to 5 job and get good income from the property investments, okay? So passive income for your life, and once you invest into the properties, all of this, it will generate the money for whole of your rest of your life. So this is passive income. Next thing is inflation proof. As I was saying before, it is inflation proof, because see, the property, as the inflation goes high, because it's a physical asset, the valuation of the property or the investment goes high as well. Proportionally, if you're a tenant, if you are renting the property, the rent will go high as well, as proportion with the inflation. So the property value goes up, rent will go up as well. So it is inflation proof. So even though the mortgage interest rates, your maintenance cost, everything is going high, you still can increase your rent, and you can the valuation of the property will increase as well. So it is recession proof or the sort of inflation proof investment. Recession proof in terms of if you keep this property investment for long term, then it becomes a recession proof. If it is a short term, every investment can be difficult, but as it is property investment, is you have to think for the long term, because it takes time to generate the wealth, and this property investment is like making a wealth for your generations. So you can transfer, easily transferable to your kids. You can transfer this investment to your kids. This video was how to invest in property. The next video I'm going to make it how to invest into the property, what is the best way of saving a tax, and what is the best way of investing into the properties. So that will be my next video. So don't forget to watch next video. Okay, now what I was discussing after that is inflation proof. Next is easy access to your fundings. Obviously, banks will lend you the money against the property investment because it's a physical asset, and then it's very secure and trusted asset. Obviously, as I was saying, it's easily insurable as well. All the banks or the insurance company will insure your property, and in case of theft, burglary, or damage, or natural disaster like flood or any damages, they will insure your property, and they will rebuild the whole property just in case it gets damaged badly. Or it is a very secure investment. So that's why banks are ready to lend you money with the they become sort of partner with us to invest into the property. We pay only 25%, but they are investing 75% of their money to invest into the property. So they are taking more risk. So that's why they will do their all the security checks and all other things, like insurance has to be in place. So all these things they will check and make sure that this is a safe and secure investment. So it is a very safe investment in terms of property investment. Easy to refinance, and you can take out the equity loan as well. So you can take out the equity loan or refinance the property. So say for example, if your property is 100,000, after 10 years or maybe after 5 years it becomes 150. So you got that 50,000 equity in the property, and that you can take it out or refinance the property and then take out the equity loan, or take out that money and then you can invest into the next property. This is also called as BRRR. They call it buy, refurb, rehab, and refinance and rehab. So that's what they do, is like they will buy the property, do a little bit of renovations, and then refinance the property, take out the equity, whatever you invested in the property, and go for the next properties. And they keep doing this to create the generational wealth. So that was. Next is, as I discussed before, it is easily insurable. You can insure the properties easily because it's a physical asset. Obviously, for you, it's very secure. You can be a secure investment. And obviously, the last and not the least is called as transferable to your kids. So all these generational wealth which you created for your whole of your life, you can transfer to your kids or all your relatives or family members, so that they can also enjoy the benefits of hard work which you have done it for whole of your life. Now obviously there are cost implications like tax implications, so you have to pay a little bit of tax if you're transferring. But if you put it this way, like if you invest it cleverly or make a invest it in the company or trust, there's a lot of ways to save the tax obviously. But if you invest or if you transfer it properly to your kids or to your family members, obviously you can save a tax there as well. So the final conclusion out of this is, as I said, lot of advantages, or these are the pros and cons I'm discussing in terms of property investments. I'm not against any other investments. As I said, if you get more returns in terms of investment, obviously you can do that. Do your own research and invest into other investments. It's not a problem at all. But as I am investing in properties and we are discussing the property investment, so these are the pros of investing into the properties. Cons or the difficult or the disadvantage only I personally think is buying and selling takes a little bit of time in terms of property investment. But any other investments, you can quickly take out the money and use the money, and you can liquidate the shares or stocks. But in terms of property, the process will normally takes 30 to 60 days to sell the property. But in case of emergency, you can always refinance the property or take the equity or loan against this property if you need the cash or money quickly. But that won't be the full money until and unless you sell the property. Okay, so that is the only cons I will say with the property investment. But everything else is I personally think is a fantastic investment. One last thing I forgot to tell you. This is very important. Why people are become millionaires by default. See, 90% of all millionaires are investor in the properties. Don't forget, if you want to become a millionaire, invest. Okay. See you next time. Thanks for watching.